ETH doing pretty good. Okay, I like what I see.
Maybe CT's finally getting close to the altcoin season that they've been dreaming and dreaming and dreaming about. Maybe now they finally might get some sort of semblance of an alt season, or is it just a last ditch attempt to lull in the masses before inevitably Bitcoin dominance probably puts in another high again, crushes all dreams of an altcoin season? It's been the story of the cycle so far. I think the lack of altcoin heavy action that people have seen, but whether it happens, who knows? But it's definitely been an interesting few weeks, especially from the news that we've seen. With the big push, especially from crypto related equities, that you probably could have bought any of those a year or two ago, probably outperformed many altcoin picks this cycle, which is such a harsh truth of this market at times, that you could spend hours and hours online, curate this like selection of altcoin picks, only to be outperformed by someone who bought, I don't know, Coinbase, Robinhood, maybe even MicroStrategy in like early 2023. But that's crypto for you, I guess.
Yeah. Okay.
These
We're
are
live
like
on
derivatives,
Twitter
right?
and YouTube. Yeah. No. Go ahead,
Right,
Mariano.
right, Darren. These are like derivatives, though. It's like infrastructure plays. I like them. Robinhood and Coinbase are kind of consensus now. You can say that after the rally or before, but they're still not that accessible to non-US investors. So I think that move from announced now Robinhood on their panel, beautifully explained as well. It's going to happen in a lot of phases too. We're going to get into that later on. That's going to bring a new addressable market to this asset class, and I'm fairly excited. But the investment case, are you guys with me?
Yep.
Are you guys with me? Am I good?
Yep, sounds good.
Yeah, sorry. Investment case is I think is a different one. Doesn't quite compete with our majors, with our altcoins. They're kind of an index, a proxy for altcoin activity, because if retail does have a lot of interest and wants to express a long view on altcoins, they might do so through Robinhood or Coinbase, which have a lot of the user base. So those could be the reasons why we have seen a major rally on those. But as I said, bullish, because these are just infrastructure plays which highlight the, I think, higher beta assets, which are the altcoins, which haven't really like done caught the scene yet. I think they'll have their time. So the as Bitcoin breaks, we're nearing all-time highs. Has it broke all-time highs, by the way? I'm not 100%
I
already.
don't think so. Not yet. No.
Yeah, because these heat maps, sometimes they're rolling 24 hours, or sometimes just like midnight to that's what TradingView does it sometimes as well. So could have 3% could have put Bitcoin at all-time highs since yesterday, since it was like 109, possibly our all-time high is what
You're right, yeah.
111 point
It's
point
close.
something.
So yeah, on CoinGecko it's around 110.5. So yeah, getting pretty close up there. Maybe we'll wick up past all-time highs during the show. We'll see. But yeah, good distinction. So yeah, I mean, let's get into it. Let me stop sharing my screen real quick. Yeah, if you're tuning in, welcome to another proof episode of Market Cap. Our normal host Stefano's out, so I'll be taking over the host and moderator duties. So today we have a great guest, Jenny, Senior Operations Manager over at HTX Ventures, is the venture arm of HTX. And then we also have myself. We have Mariano, our analyst focused on like evaluation frameworks. We have Darren as well, our analyst and panel contributor. So I guess, for the guest, Jenny, do you want to maybe give some background on yourself and provide an overview maybe for anyone? I think everyone should be familiar with HTX and HTX Ventures, but yeah, maybe just give an introduction to yourself and the company.
Yeah, of course. So hi, everyone. I'm Jenny. I'm the Senior Operating Manager at HTX Ventures. We are the global investment arm of HTX. formerly known as Huobi. So I come from a background in the U.S. secondary market and have spent the last 4 years working across incubation and venture investment in Web3. So at HTX Ventures, I lead efforts in deal sourcing, investing, branding, and events. So it's a really great pleasure to be here today. So for like a quick overview of HTX in general, so HTX founded in 2013 and it's one of the earliest digital asset platforms. Now it grown into like a full stack blockchain ecosystem with over 47 million registered users worldwide. And we have a strong market presence in Asia. So on the venture side, HTX Ventures has backed over 300 projects across all major sectors. So our mission is to support the most promising founders and bring Web3 into daily life. And through leveraging our deep network of resources and strategic partners. So some of the outstanding projects that we have invested, including Babylon Monad, Avel, and Bearchain, among others. So yeah, really excited to join the conversations today.
Yeah, that's great. We can get more into some of the things that you guys are looking at over at HTX Ventures, but let's start off with, I guess, more on the news side. So I mean, there's a lot of news to cover this past week. I guess we can actually start off with our usual Market Pulse update. So for those that don't know, Market Pulse is it's the newsletter that we send out on the weekends to our premium members. And so yeah, just some standout items this past week. We have decisive trading volumes, spot remaining high, perps. Yeah, second consecutive week that the perps volumes have declined. We also had the DXY over on the macro side. I can share my screen and show it as well. Yeah, we had the DXY had its worst first half of the year since 1973. That's 1973 is shortly after the U.S. left the gold standard, right? Okay, so that is pretty significant. I mean, we're not going to like LARP as macro experts on this panel. Maybe we'll need to have someone on more from like the traditional finance side to who's more focused on those markets. But yeah, what else? So I think we also had. I think this is what people were more interested in this past week. It was a lot of exchanges and fintechs getting into the like tokenized stocks business. So you actually had Bybit. I think it was Bybit and Kraken both partnered with it was X Stocks to have their tokenized stocks trading, and then the bigger one was actually Robinhood, right? So you had Robinhood announcing their tokenized stocks. It's not actually on chain, but it's tokenized in the background, and you can actually they're using it to basically allow European users to buy and sell stocks on the Robinhood platform. I think the most interesting part is probably the private equity side, right? So it's allowing users to European users only. So it's actually like gated. Yeah, I mean, I haven't gotten to try it. I guess Darren, do you have access to that? Like you're in UK, are you allowed to use these new Robinhood features or no?
I mean, sadly not,
Sadly
because
not. Okay.
in
Brexit?
early 2019, the UK actually left the European Union. It was like a
Right. Okay.
huge,
Yeah.
constitutional crisis in the UK, made family members fall apart. So far, sadly not, but hey, at least the Europeans get to win at some point, right?
Yeah, so I mean, I think we can get into it. Like, I think right now Robinhood is kind of like the biggest topic right now. I mean, you had a couple of things. You had the panel that was announced, like immediately after. You had an announcement that Robinhood CEO Vlad Tenev was gonna like host a panel with the Arbitrum, I think the chief of strategy, and Vitalik. So it was like a very like spur of the moment thing. And then you actually saw, we covered it as well. Yeah, it's like immediately after this announcement over the weekend, you had the ARB token price spike. And then this is from this past weekend. So I mean, by now, like a lot of the move in ARB has since retraced, but it kind of just goes to show just the impact of, like, I don't know, I guess people were surprised by this, even though, I mean, it was reported like around a month ago that Robinhood was like, they're kind of between Arbitrum and Solana. Like, it was already known that the Robinhood was going to roll something out for European users to trade stocks, and they were going to use like blockchain in some capacity. It wasn't really known, like, yeah, how exactly it's going to work, but it was known that Arbitrum and Solana were in the conversation. And Arbitrum and Solana are both, they're already listed on the Robinhood platform, right? Like, you can buy those tokens on Robinhood already. So I guess, yeah, if I can ask like a broad general question, like, what do you guys think about this? Is it like a lot of noise? Is there like a lot of signal behind this? Yeah, just what do you guys think about Robinhood's like new foray into the blockchain space?
Well, it's an interesting one, right? Because at first hand, we heard they were going to choose between Arbitrum or Solana.
Right.
But then when you look back, I think it was like 2 years ago when the SEC had its case against Solana that Robinhood delisted Solana. I'm pretty sure.
I remember. Yeah, I remember that.
Yeah, if you hadn't taken your Solana out of your account, it was basically liquidated, sold at like a really low price. So in a way, I guess for those who remember that, then you kind of understand maybe why they wouldn't have gone down the Solana route. In terms of like tokenizing these equities, private equity, stocks trading 24/7, that's definitely a side of it, which whilst CT can be divided on this topic, the element of blockchain technology in that the things that it's brought about, especially in the case of Bitcoin, and one of the huge things is 24/7 trading. So I think from that perspective, it's probably a positive. But then on the flip side of it, I guess if you're being a bit more of a pessimist, a bit more cynical, you would say, well, why does it necessarily need to be through such a huge company like Robinhood? Why couldn't, say, a smaller company have been able to gain some of these luxuries that Robinhood's been able to do by basically coming out and saying, we're going to do all of these things? But I think the caveat is that when you watch Vlad's keynote at ETC, at the very end of the presentation, it basically says a lot of these things are subject to regulation. So still there is that last hurdle of if the SEC and this new administration, if there will be a push for it. I mean, if you're a gambling man, you'd probably say it's like pretty likely. But I guess there's still that tail risk, right? That these things don't get pushed through. And it could be something quite negative for the space overall. But the grand scheme of things is it is leveraging one of the most powerful aspects of blockchain technology, in that in most cases, it runs all the time, doesn't have much downtime. But that's just my own opinion on it. I'm curious to hear what, Mariano and Jenny think about it as well.
Yeah, it's definitely a great question. So when you talk about downtime, it kind of reminds me more of Solana when they have shutdown moments, and then definitely not the first choice that Robinhood would choose to build because of like they definitely require more sustainability, and which is not that reliable for Solana right now. And I guess in the announcement as well, Robinhood says that even though they're building on Arbitrum Orbit, they're looking to launch their own layer 2 chains within the next few months. So
Right.
yeah, Arbitrum Orbit is more of like a launch pad, I guess, for Robinhood right now to push the strategies or test the market forward as like the first mover or as the first group of mover to the market. without letting the market to park in and then buy Bit. And secondly, because Orbit is also like Ethereum adaptable, they can just move whatever they have built on Orbit to their layer 2 in the next few months, which is, I think, really practical in strategic sense. Also, having their layer 2, it's like giving them full control over the chain, and then allow them to manage better costs, user experience, and risk exposures, especially on the compliance side of things. Yeah. Also, I guess I just really excited for like to see companies like Robinhood or Kraken to test out the market with tokenized stocks. Like as an investors myself, I just really love to explore assets across globally. I remember like a few years ago, I wanted to invest in Nintendo, but it's like a Japanese company. And then as like a Canadian, it's like really hectic for me to invest in a Japanese stock. So with like the stock tokenization, allows, I'm just happy that I'm in the future, I get to access to all the assets across the world more like straightforward in a sense.
Yeah, I mean, for sure, like, yeah, no one wants to deal with like Japanese stocks and like the tickers are numbers, like it's not even letters. But I mean, yeah, like I guess on the without like having dug too much into the actual infrastructure and how it works myself, like I think it's going to function. I believe the way it functions, and maybe someone can correct me if I'm wrong, is like it's somewhat similar to like you have these ADR stocks, like yeah, so like if you wanted to buy like Xiaomi stock or something on Robinhood, like they have the ADRs. Like it's kind of like a wrap token but a stock, right? It's like a receipt. It's like some treasury company that just acquires the stock. You can buy a share. I think that's how at least the private equity portion, which we didn't touch on yet, of this Robinhood tokenized stock works, right? So if you're buying like the SpaceX token or like OpenAI token, then I believe that's how it works. I'm not too sure how it works for the like I guess just publicly traded U.S. stocks for Europeans. Mariano, do you have any thoughts on that?
I think you're muted.
Oh yeah, it is muted. Yeah, try unmute, mute and unmute. I don't know.
I guess the news was so bullish that
news was so bullish that he's literally speechless.
yeah.
Yeah, and I mean this is like what you're looking at on the screen. This is from over the weekend, so I think they must have announced this. It was like Saturday night or something, and then obviously they had the actual keynote that's being alluded to on this slide later in the week. So I think it was really interesting. Like I don't know, like you don't bring out Vitalik for no reason. You know what I mean? Like they could just like if I'm imagining like the Robinhood team and like they're being pitched like from the Solana and Arbitrum, like I guess Arbitrum makes more sense. Like they have Arbitrum Orbit, like they have a dedicated they have a dedicated team and protocol for this for spinning up chains, right? Like Solana doesn't really like it's fast, it's performant, and that gets its fair share of institutional adoption as well. Like you've seen like Visa and stuff. So some other chains use Solana. Like they're always mentioning mostly like Ethereum and Solana, right? Ethereum probably just because like they've heard of it. It's been around a long time, and Solana because it's performant for payments and stuff. But yeah, if you actually want like more customizable, like customization, more control of the stack, like I guess it makes sense that you would use a solution like Arbitrum Orbit or some of these other services to help you spin up your own chain. And especially if it's going to be something like this for Robinhood, where it's like you're not actually buying. It's not like the X stocks thing, right? From Bybit and Kraken, where like you can actually buy stocks on chain and like put it on Aave or something. Like it's just like a back end thing, right? Like you still have to use the Robinhood app. It's like it's kind of like the exact same thing, I would imagine. I mean, I haven't tried it out, but it's just using blockchain in the back end for like transparency and stuff like that. So I imagine it's like even compared to most apps, it's like we've seen apps move right over the years, like DYDX moving their own chain. But for Robinhood, it's like for the users, it's the exact same thing. So there's probably even less apprehension to switch providers down the line if they have to, because it's all just back end stuff anyway. So it's really just like the team biting the cost. It shouldn't really affect the users too much if they execute it well. So I think it's pretty interesting.
I think a big one as well is if they go on to when they have the Robinhood chain, if it is essentially like Arbitrum Orbit, if it's a similar deal with a lot of the optimism chains, the super chain, and the sequencer fees, if they really become like a real predominant pushing force in finance, then maybe we finally see like tons of these fees go through, and whether it has a reflexive effect or not on Arbitrum itself, it's hard to say. But then I guess if they have success doing it from like a game theory perspective, then I'm sure a lot of these other companies may just try and like copy what they've done in the same way we've seen all the treasury companies, the MicroStrategy clones in essence. Maybe, I mean, I've never been that big a fan of a lot of I think a lot of these tokens like Arbitrum and Optimism, in some senses, they don't always need a token. But if loads of these pop up and then the fees really start piling up, then maybe we create, you get this sort of new bullish case for some of these L2s out there. But again, how do you differentiate between all the different ones? Why are they going to choose an Arbitrum over an Optimism? Then I don't even think I could answer the question myself. I haven't spent
incentives. Maybe incentives. Like, just get money thrown at them. I have no idea if that's actually part of if anything was offered to Robinhood. I mean, we can speculate. I know a bunch of chains. Yeah, incentives are definitely part of the deal. I think yesterday I was speaking with.
Go
ahead, Mariano.
Let me chime in here. So on the panel that Vlad held about, I think it was the first one that he drilled down into how the tokenized stocks and the platform are going to work. He disclosed like a couple of phases. So three, starting the first, we would still rely on a broker, like the traditional market broker, where their TradFi systems work today. Whenever a user puts in an order, it goes through their own systems backend, and then that order routes through a broker, which then acquires or distributes the stock on the stock exchange. So that first phase would still rely on that intermediary. On the second phase, it wouldn't rely. And then on the third phase, it wouldn't just not rely, but anyone would be also akin to holding the stock, but instead of holding it in the stock exchange and going all through the hurdles of buying traditionally, you would hold on chain, which is the utmost, and self-custody, which is the utmost long-term vision here. And I'm very bullish on that vision. I prefer to hold my own, let's say, Apple stock, Robinhood itself stock, than I mean, it's not like crypto that we have a custodial risk in here, but it just feels more authentic. You feel like more of a stockholder if you do have the, let's say, contract that you can call it yours. What do you guys think? How about you, Jenny?
Definitely. I mean, it definitely feels different. I mean, if you self-custody your own stock, I'm sure it feels different. But I mean, it's more about finding, like, meeting where the customer needs. And I feel like the Robinhood's approach is testing out, utilizing like blockchain to achieve the next level of customer experience, which is 24/7 self-custody, no cost, like something like that, to managing your asset instead of the traditional one.
Yeah, and I guess one of the core principles of, I remember years ago, before there were any, back in my day, as if I'm some old man, but I'm not. I remember reading all these books and things years ago before loads of these projects came out, and one of the big things touted for smart contract technology and the benefits that it may bring is the reduction of intermediaries, right? And I guess, when Bitcoin was first, really pushing on the scene, it was touted as the challenger to these people like Western Union, all these other companies who deal in all these global remittancy payments. And maybe by and large, this is an extension of that. What we will eventually see now is that through smart contract technology, does it enable the average person to be able to buy, sell stocks without necessarily getting completely smashed by fees through their broker. I mean, people used to complain about ETH gas fees back in the proof of work days, which, they're gone now and they were terrible. But like in some of these traditional stock accounts, you can't just easily buy, $50 to $100 of stock. You might get completely wasted on fees. So, is there a case where, for the average person, they want to own a few $10 worth of a stock? Maybe, is it going to be a life changing gain for them down the line, depending on the country they're from? It could absolutely be a huge difference. If you double or triple your investment, even if it's only from $10 to $30 in some countries, that's like, a large amount of money. So, in a sense, from the altruistic point of view, it could democratize elements of finance. But then at the same time, you could also argue, is it just the people who are so entrenched within crypto who are going to profit off of these things the most? I think that's the two sides of the coin that I look at this right now.
Yeah, I mean, you brought up fees. I mean, if you use Coinbase, like if you use Kraken, like you get hosed on fees. Um, like on Kraken especially, like you have, or it's actually funny. Like yeah, they have like their order book mode. Like you have like the basic like buy mode, and you have like the trader, the trading view, and then yeah, that has much more competitive fees. But like yeah, it's pretty clear. Like Kraken and Coinbase, like they're trying to hose their customers on fees. Um, it's pretty high. Like if you just go through the standard interface of like what like maybe like yeah like a Robinhood customer who's not who's never used like a traded on like a exchange or something, like a non-crypto native, right? Like using crypto for the first time, and they log onto Coinbase or Kraken, yeah, like they're going to get rinsed on fees. So I think like it's interesting. Yeah, I mean it's going to accrue to like the Coinbase and Kraken, or yeah, in this case Robinhood, right? Like they're expanding their offerings. Yeah, sort of. It's like they're all trying to take like this activity from each other. Like you have Bybit also adding stocks, and you have Bybit, yeah, Bybit adding stocks on the platform as well. You have Kraken doing it. You have Robinhood. Like you have yeah, everyone's intermingling. So it's almost like things are like converging to these exchanges and like apps, kind of just all becoming like kind of like the same thing almost. So it's definitely interesting. I definitely think like in the past you had um, like exchanges were afraid to make moves, like Kraken. Yeah, it was like forever. They were always known for being like super compliant, like almost too compliant at times. And then now, yeah, they're like doing all this stuff. They're launching a fintech. They're doing on-chain stocks. They're like in, rumors to be discussing the Kraken IPO. So it's like pedal to the metal. It's like they flipped the switch. So now instead of skepticism, it's like, okay, what can we get away with? Like, let's just go all out. Maybe we get told to chill out a little bit. Like that's okay. Yeah, so I feel like these large exchanges are like testing. Yeah, they're like testing the waters a little bit, like seeing what they can, and can't do. Like you had, yeah, I know with Robinhood specifically, you had the OpenAI like private equity, and then OpenAI themselves came out and said like, okay, this is not actually like representative of actual equity. This is, yeah, it's like an ADR. It's a receipt stock, right? So I mean, I don't think there's anything wrong with that. Like everyone knows it, right? But yeah, it's definitely interesting to see like these new. It's like every other week now, right? Like we have these pretty like substantial changes. Like yeah, stuff that'll be like news of the quarter, but it's like happening once a week right now, right? Like just I read it was a CNBC article discussing the Robinhood um stocks stock tokens, right? It used the word token like 13 or 15 times. So I definitely don't think I've ever seen like a traditional media outlet use the word token like that much. So like at the very least, it's putting like the on-chain like world on the map, right? Because you have like probably most people's view of crypto is probably just through Coinbase or Kraken or a Binance. It's like holding Solana on exchange, right? And then there's like a small subset of those users that end up actually going on chain. So now I think it's like on, yeah, like you had Coin. I don't know if you guys saw that Coinbase thing that Brian from Coinbase posted. He's like, it's on chain. So yeah, like the word on chain is now becoming like it's entering the lexicon of like what normal people can be familiar with. So yeah, I think definitely interesting to say the least. I think we can move on. Like, there's more. Yeah, there's stock stuff all around. So we also had Bybit. Well, they launched a couple of interesting things. It was just last month in June they launched their own DEX on Solana, ByReal. It's like a DEX slash launchpad thing. Yeah, let me share my screen again so you guys can see what I'm talking about.
Everyone wants a piece of the pie of pump fun, right?
Yeah. Yeah, but I mean, yeah, it is interesting because it's like they had their first, I don't know if you want to call it an IDO or what you want to call it. They had their first token launch. It was for a token called Frag Metric. It's like a liquid restaking solution on Solana. Yeah, but it is capped. It's like a 360K raise. So it's not like, yeah, I don't really know like the specific angle that they're going for. So you have something like a pump where it's like super speculative, like just go crazy, trade as much as you want, and like they're happy to take all the fees that they can get. So yeah, I don't know. Do you guys have any thoughts on what angle Bybit is trying to play here? Like, it's like a very differentiated, it's a very specific type of like product that they launched here. It's like this DEX and like this tiered launch pad. So I don't know if they like it must be related to they must have plans to integrate it into their actual platform, basically.
Personally, I think it's more of a knee-jerk reaction to the success we've seen from Hyperliquid itself, because now the general consensus that we see in the market currently is this sort of big anti VC, anti raise argument. Everyone points to the success of Hyperliquid. And I think ultimately that's why we're seeing this from Bybit. And you could say the same thing with we saw CZ really pushing, I think it's Asta Dex and the dark pools. And at times in an industry full of competition, I think often, in the past, you'd see so many clones of all these different DeFi projects, right? During the Pool 2 era, every project came out, was offering incentive tokens. Even during the fork meta, there was forks for days non-stop, right? And I think that this, from like a narrative sense, is sort of like Bybit's big push, in that you can see, from the data you showed in the market pulse of the DEX and the CEX trading volumes, and the difference between spot trading and perp trading. There is that general narrative right now that people don't want to necessarily trade on CXs anymore, and whether that's to do with liquidation engines or shady practices, I'm not going to speculate on that, but I think a lot of it is that in the last cycle there was always these dreams and intentions, everything's going to come on chain. We had, like, I remember, was it through Luna, they had the mirror application that you could buy. They got sued by the SEC, and that was like the first foray of this market into that sort of market in that avenue. Whereas now we've got enough perp dexes that, you know, there's probably more perp dexes than actual users at this point. But I think that ultimately it puts pressure on the rest of these centralized exchanges to offer something of a similar nature. And, you know, in my view, that's why Bybit have done what they've done. Like, you know, they've chosen to launch on Solana for a reason, right? How many big perp dexes exist that are currently built on an EVM format of some sort? Yet within Solana, I guess you've only really got the perps that Jupiter offers. And I know the fees on there are like insane compared to like what some of the other competitors. And so maybe, you know, the guys at Bybit, they see that and they think that it's a, you know, relatively easy battleground to go into and capture a lot of the volumes that we've seen, especially with the demise of the meme coin mania. But, you know, I'm interested to hear what other people have to think on that as well. Maybe I'm wrong.
I think it's like a if you can't beat them, join them kind of thing. Like, yeah, I mean, Bybit also has, yeah, it's not like they have Mantle, right? Yeah, like I guess the relationship you could say between Bybit and Mantle, it's not like, you know, one to one like it is with Binance and BNB Chain. So I thought it was interesting that they, yeah, just chose to like dive right into Solana. But I mean, it's pretty clear, like you can see it, yeah, in the data that it's been a while. Like Solana's been, you know, like it's the place for activity, right? Yeah, you had Binance come out and like, you know, they have a very large chain ecosystem of their own, and we're able to put out the yeah, the Alpha Points program, help spur some activity, which is, yeah, spiked, remained pretty high past couple, you know, past like 5 6 weeks. But yeah, Solana is still, it seems like the more like sustainable option here. Like, yeah, you can still see on the chart like Solana DEX volume just still, you know, consistently climbing up and to the right over the past few months. So yeah, I think they're kind of like, okay, why don't we just go right to like right where all the action's happening? Like, instead of, you know, hoping these people, I don't know, like get tired of like trading coins back and forth on Solana and then come on Bybit. Like, let's just meet them where they are, put out our own thing, and then go from there. Yeah, the launchpad thing is also interesting. Yeah, but the DEX as well. It's like, I guess it's like a pragmatic kind of approach. So I guess, or Jenny, do you have any like thoughts on, I don't know, like the mindset of like some of these large exchanges, maybe, and like how they've, I don't know, like how they're yeah, like how they might approach like the on-chain, like the importance of on-chain trading, right? Like you have Coinbase with Base, you have, so yeah, over the years, have exchanges become more like willing to like venture on chain?
Yeah, definitely. So HTX is also a centralized exchange. So I definitely not going to comment on our competitors, but meeting, I guess, meeting where the demands or meeting where the user goes is always something we're looking into. And you can just see that the centralized exchange, our trading volume is going down. Part of it is also due to the traders, they change their activity, they change their actions, and then they prefer to use more decentralized exchange. Part of it because I mean, ultimately blockchain is created like backed by the idea of self-custody, open and transparency. And in the old days, the infrastructure of DEX is not able to support the balance between like liquidity, customer experience, and all that with the transparency and then the self-custody that traders want. But now you can see that a lot of the DEX are built with like centralized level of customer experience, UX, integrated liquidity, and all that trading tools. For now, like it's a easier, I guess, choice for traders to say, oh, okay, I see there's better options, or there's like something that fits more of my needs out there, and which is DEX, and it's not central exchange that they're wanting to trade now. So like as central exchange like HTX, we're also looking into exploring DEX. We're backing some DEXs like Vertex protocol. So we're kind of exploring the path between how to combining the experience of both centralized and decentralized exchange at the same time to meet where the users ultimately seeking. That's my point of view for this.
Yeah, it's
Yeah,
a
I guess
very dynamic space investment, especially in the early stage. I think we have so many projects, so much to filter, and then you have all these massive events happening on the liquid side, such as sex is going on chain. You could argue Ethereum's future now is dependent on Coinbase, Robinhood, and a few other centralized players. I would actually want to caveat here. I think you know Ethereum's long-term vision is not to have that, but it is now part of the game, and they're going to play with that. I think that argument. Okay, institutions are coming to us, not to you, but okay. At the same time, you have this announcement coming from Bybit, which is playing for Solana, and then when you think about where the value accrues, which is something we always talk about here in the in-house is okay if ETH does let's say capture all the marketing and does fairly well if ETH realized, for example, brings a lot of
right.
activity to its layer twos. How does ETH perform? If, for example, I think someone said yesterday in our group in-house here that there are massive outflows from Base right now happening. So I think it's Binance reshuffling its ETH balances on chain instead of keeping them on Base or just you know off ramping to L1, if you can call that. So if the that this is like a segue into how Arbitrum, for example, captures Robinhood's if it does have a lot of success, right? And if Arbitrum captures it, how much does it accrue to ETH itself, which is the main data token ecosystem, which everyone wants ETH to go up. If crypto is going to do well, it probably will because if the tide rises all boats. But looking individually, I'm not so sure of the value prop that ETH has with its fees, especially. And there are a bunch of notable discussions going on in parallel, which are led by prominent investors like John Chard from DBA, a lot of other guys as well, Multi-Chain Capital, Kyle, etc. That basically put Bitcoin in a different bucket, and this is kind of acceptable. I think for TradFi has accepted it. It has recognized Bitcoin as a store of value. It doesn't have to accrue billions of hundreds of billions of fees to justify its valuation. Jenny, how do you think about L2s in general? I'm not sure if you guys do invest in L2s currently, but on the accruing value side, you have specific opinions in how it might roll out forward?
Well, we have very little investment into L2s, I have to say. Also, very selective investment into L1 because we believe that the competitions within these two fields are it's hard to predict in general. It's I guess right now it just there's a lot of chains. There's a lot of chains, and it ultimately comes down to like who can attract their targeted users the most, and then managing their ecosystem well in the long term. So I guess in the ecosystem sense, Ethereum is still having the most advantage of having like a more fulfilling ecosystem overall.
Yeah, I mean, Mariano brought up the point earlier about it's like Bitcoin's allowed to be an unproductive asset. Ethereum's not. Like that's just the way. That's the way it is. I mean, this is kind of like how crypto natives like viewed it, and then yeah, this is like already spilled over into TradFi, a bit. So yeah, it's like it needs the activity on chain actually to justify its valuation. I mean, it already has like all the money parked on it, right? Like over $60 billion in TVL parked on Ethereum mainnet. So and then, yeah, as you mentioned, like yeah, you have something like Robinhood, and then he does a keynote with Vitalik, and then he's like what is he actually doing with Ethereum? He's like launching an interim, like the way that they presented it, it's like their the Arbitrum partnership is like an interim solution almost, right? Like it's not like, oh yeah, like we're not like super committed, but like we're using it for now. Like this is pretty cool. And then yeah, so like, they're using like this interim relationship with Arbitrum. Yeah, so it's like how much of that accrues to Arbitrum, and it's like how much of that goes to, it's like all these steps downstream, for even such a big partnership like a Robinhood, to yeah, kind of like accrue value to Ethereum, to the ETH token as well. And then, I mean, you could argue that this is like less substantial than Coinbase launching Base. I mean, Base is like more, or Coinbase is like a more, I believe, yeah, they're like a more profitable. I think they're more profitable than Robinhood, actually, surprisingly, in 2024 at least, I believe. But yeah, I mean, Coinbase went ahead and like that was in, when was Base launched? 2023, right? So I mean, you have like two of the biggest like possible, at least in the U.S., you have like two of the biggest potential customers to like launch a chain and generate like a lot of activity, that's in some way tied back to Ethereum. All right, so it's like how many more of these are there, right? Like you got Coinbase, you have Robinhood, it's like two of the biggest retail exchanges for that kind of activity. So like I don't know, I feel like if you're Ethereum, it's like how many, yeah, like at the Ethereum Foundation, and they have ETH Realize to try to reach out to institutions, right? Like how many? It can't really escalate beyond Robinhood. I don't know. Or am I, like, do you guys disagree? I feel like it's kind of like, where do you go beyond having Robinhood, launch a chain, um, on top of Ethereum?
I think part of it at times is, as we're all crypto people in here, many people remember the days of the vampire attack, right? When Uniswap launched, then SushiSwap
Yep.
came out off of the back of it. And I think in some senses, what we're seeing from someone like Robinhood and Coinbase doing these chains is, I think in essence, it's an attempt to sort of bring this sort of hardcore on-chain capital to try and like bring this with an easy bridge back into these sort of legacy systems, these traditional huge exchanges that will offer stocks, crypto trading, because ultimately, there's a lot of money tied up in this on-chain environment, right? And for a lot of people now who've been in crypto for a long time, and if you're a hardcore user, you're probably only using CXs to off ramp. And so I think that in the case where you imagine where, you can do all the things you like to do on chain, but then you can also off ramp with a click of a finger, then, in essence, I think that is probably one of the biggest value propositions for the companies to do this, because that is, you could argue, one of the sort of main negatives of a lot of these huge DeFi, decentralized exchange platforms right now, is that sure, you can off ramp if you want to, there's different mechanisms you can use, but none of them are as seamless as depositing stablecoin, Bitcoin, whatever, into an exchange and off ramping it into your bank account. And I think that that's what a lot of these companies are doing right now, because it's still a very untapped zone that we have of the stuff that goes on chain. Everyone isn't on chain. You hear it all the time. We're going to bring the world on chain. Yeah, you bring the world on chain, half of them are going to lose everything through smart contract problems or phishing, or how many people, if you bring the world on chain, will get messed up from slippage or sandwich attacks or MEV issues. So I think that in essence, a lot of these companies are trying to circumnavigate that by basically saying, no, we're going to bring you on chain, but we're going to give you all the luxuries that you can have from using a centralized exchange. Whereas for a lot of us here, how many scams have you had to dodge? How many protocols being hacked have you had to bypass? How many times have you had to rush to revoke.cash to like revoke revoke a bad smart contract? And I think that the centralized exchanges having that avenue, it's kind of like the sort of easy route for a lot of people to get into it.
Yeah, for sure. I think the last thing that we can touch on is like on the note of stocks. You had the launch of X stocks. So yeah, this is I think it got overshadowed a little bit by the Robinhood, tokenized stock thing. But yeah, you had X stocks as well, which is kind of like the first, I guess, the most notable like tokenized stock attempt since Mirror over on Luna. That was like late 2021. I think it shut down in like probably early 2022, right? So yeah, I mean, X stocks launch like it came right out the gate, like it's already integrated with you have Jupiter, Radium. On the exchanges side, you had Kraken and Bybit, right? So I think it's like pretty. Yeah, it seems like this is like a pretty thought out launch, I would say. That this is more like a classic tokenized stocks. Yeah, like you can just buy it on chain. I mean, we haven't seen it integrated really into DeFi yet that I know of. I don't know, maybe in the past few days this already changed. But I mean, the doors are open basically for these kind of DeFi integrations that are like the Robinhood thing is cool. Like it's obviously interesting, but it's much more of like a back end thing for now. And then this is like kind of more, like you could potentially be like borrowing against your stocks, like crafting like permissionless strategies and stuff. I don't know. So I guess what do you guys think about the X stocks launch?
It was weird because, like you said, it was so overshadowed by the Robinhood stuff that at first I thought it was actually just like the extension of Robinhood. It wasn't until I read more into it, and you're seeing people like quoted orders on Jupiter to swap like, I don't know, a few $1,000s of fart coin for like Nvidia shares. And like it's kind of like something out of a Black Mirror episode, like you're swapping this like digital meme coin for like, a digital version of a stock. And so however much demand there actually is for it, I think by and large, it's mainly going to be from crypto natives who are either looking to de-risk themselves or try and convert some of their profits into these stocks. But it's interesting how these things all happen at once. Like you said earlier, you get whole quarters worth of news in like less than a week. And I think it's important to have perspective to these sort of things because for years and years, it's always been, the mission for a lot of people within crypto and DeFi to bring a lot of these things on chain. And like now they're slowly starting to come. It's like, well, no one really cares. Like it's a great innovation, and I think it's an amazing thing that's happening. But if someone had said that to all of us like 2-3 years ago, you'd be, yeah, absolutely. They bring stocks on Solana, like Solana's gonna like double, triple, quadruple in value. So I think until there's like an actual reason like to bring new users into the ecosystem, I think it still has a slight element of like a fragmentation effect where there's even more things now for people to allocate their capital to. We've got so many more tokens now than we did in the past that you look at the clientele that crypto attracts, how many of them really care about holding, Nvidia on chain, Tesla on chain. Whereas I think it's much more serves as like the building blocks of like the next sort of 2, 4 to 6 years ahead, where there might actually come a time where, there is a traditional exchange, a TradFi trading exchange like Robinhood, CME, or whatever. You download it on your phone and you buy these stocks, extremely low fees, using Solana or through the Robinhood chain. And I think it's still, people still aren't quite sure what to make of it because, if it was super, super bullish and had a massive effect on price, which in this industry, at times the price is the technology. I know it's a sad thing to say, but it's kind of true at times. You know, if this had
Right.
happened and we'd seen Solana go up hugely, then people would be hailing it as a success. But because we're in the summer, generally a slow period of time within crypto, I think a lot of people still aren't quite sure what to make of it.
Yeah, I mean, I think the thing that's interesting to me is like this is like from the users, like on-chain stocks or even trading stocks on like a centralized exchange. Like this is always like a back of mind thing that people would talk about every now and then. Like there wasn't like I feel like there wasn't that much strong demand from users. Like no one was dying to trade Nvidia on Solana. Like that's kind of my interpretation of like the general sentiment, you know, over like yeah, like 5 years of this kind of being a thing in crypto. So I guess Jenny, if I could ask, like, I don't know, like, what do you think about what drove this? Like, it seems like this happened like super fast, like a sudden push. Like, you had a bunch of exchanges, yeah, that they all kind of just decided like, hey, like I think it'd be good to like combine stocks and crypto into one venue. Like, yeah, I guess like what do you think is going on, you know, in the cogs like at these exchanges? Like what drove that kind of decision to like combine these, you know, the DeFi and TradFi offerings together?
Definitely. So I think the by like Trump taking stage, I think it's like a huge boost to what people can imagine blockchain could do integrating with the traditional finance. I know that the talking of bringing stocks on chain has been going on for a while, especially like projects like Engine Layers are like bringing their people to Senate to like try to get the the policy approval for these kind of asset launch. And I think it's a great experiment for X stocks to push out these kind of services. But just as Darren said, it's definitely more about like bring whether or not you can bring the people outside of Web3 into our ecosystem or bring more capitals into the ecosystem by introducing these stocks on chain. Robinhood is a different story because they have their own group of customers that's outside of what is currently dealing with like using blockchains in general, which is a great like boost to the ecosystem. But I mean, like from a like centralized exchange point of view, or from like a general finance people point of view, I see as the line between traditional finance and blockchain are getting more blurred, as like traditional finance are utilizing blockchain, and blockchain is partner up with traditional finance in all these kind of ways. It's let's see who can like get the most advantage out of this kind of collaborations, but it's definitely like a positive moving forward in the next few years by integrating all the services together, by taking away the middle persons through the utilization of blockchain or our settlement layers instead of the traditional finance layers of approval. Yeah, I think ultimately it comes down to whether or not you can provide like ultimate experience of managing assets, and something that would be like useful for like asset management for me is to put all the asset in one platform, so you don't get lost of any other asset, or managing all the asset easier within the one platform in general.
Are you guys interested though in investing in American stocks like these, or is it just more the both? It's a segue question to you. Are you guys investing in liquid tokens as well, or just in liquid?
Sorry, I wasn't able to catch your question.
Yeah, sorry. Are you guys investing in both liquid or just illiquid tokens?
Oh, for ventures only, we investing like private market tokens, which is in liquid.
You invested in equities as well, like the company's equity?
Currently, mostly tokens because we're backed by exchange.
Makes sense. Makes sense.
Unless it's like a really strategic investment.
No, they don't release too much alpha
Yeah,
here.
don't spill the
We will
beans.
make sure we don't spill too much. But on my side, though, I think that it is a net positive. We have multiple hands coming together for this product, though. BackFi is the issuer. They were
Right.
the main infrastructure provider here for X stocks and Solana. There's this X stock alliance where they combine top protocols in Solana like Camino, Radium, Jupiter, which have started already. I think later this week, at least whenever it was announced, it said later this week we would have DeFi. So Camino, you would be able to lend out your stocks, and that's massive. I think that's a massive unlock. It was a massive unlock with crypto itself. With stocks just goes higher and shows how the centralized banks are the convenient, I think, competitors to make large use cases in crypto. That's like most of what the DeFi TVL is today on Ethereum, for example, is on Aave. So that brings as well Chainlink, which is a massive player. Their Chainlink, the CCIP, which was not that used previously, but whenever we have like products like these, which I think it was like the biggest Chainlink promise at the end of the day was like connecting TradFi off chain to on chain. We will see Chainlink's value prop getting higher and justifies its valuation, if you will. And then there were a couple, Daniel mentioned a couple of sexes as well, which joined the club here, which brings this product as AAA. I think it's amazing, but it got silenced. I would make like a lot of noise in CT if I was them. I didn't see that. I mean, my home page could be different than yours as guys. But like this is a question to you guys. Did you see much noise around this? Like I didn't.
I did, but it was like a very brief window in time before like ECC and Vlad had the keynote, because the X Talks announcement came. It was June 30th, so it was like Sunday, right? And then you had I think you had the Robinhood one like right around the same time. So yeah, it was like a brief period where it was pretty like there was a lot of people talking about it. But I definitely think like I mean, they're integrated to like so many exchanges now, like decentralized exchanges and centralized exchanges. So that should definitely help to give them a boost, right? Like they want to advertise, like, hey, like check out our strategies on Camino or whatever, or trade the stock right on our platform on Kraken or Bybit or whatever. So maybe that can help to kind of like buffer their, I don't know if you want to call it like a lack. I guess lack of marketing is like kind of harsh, but yeah, like I feel like it is kind of like a big, like I don't know, like for people who are active on chain, it's like this is like almost a bigger deal probably than the Robinhood thing, right? The Robinhood thing is like pretty cool, it's like substantial, but it's like okay, I can't really do anything. I can't really do much with this. But the X stocks is like that is a big unlock. Like, and it's an unlock for non-crypto natives as well, right? Like people who just like held a bunch of stocks, like okay, how can I like maximize capital efficiency? Like okay, like that could be a real reason to go on chain.
We haven't mentioned that Robinhood has taken out in the middle of GameStop's mania the buy button, right?
Yeah. Right.
So that could be a red flag going forward for that people forever gonna make your reputation, like it goes away really fast and takes a lot of build. Like I'm not gonna be too harsh on them and saying they lost their reputation forever. They're rebuilding it. They're coming on chain. They're building. They're doing their job. But that piece of the pie which they left very to be desired, which was basically allowing people to trade. In crypto, that's unacceptable. It's permissionless. Anyone can create a pool, can trade a pool, can withdraw from the pool, liquidity pools, right? So that was which is akin to an exchange, right? That was I think a drop in the bucket for people maybe in crypto not being 100% embracing Robinhood and whatever launching.
For sure. Yeah. And just to close off, because we are coming up on time, but yeah, that was a really great point to mention, like the Robinhood. It was a while ago, right? Like 2021. But, for like the people involved in that, like the retail traders involved in that, it was like a big, like, they don't know like what actually drove that, right? It's just like they just know that they kind of got screwed for it. I remember, yeah, that was a huge thing. I definitely think like if you're talking about overlap between like people trading stocks and crypto, like it's that group. It's like the GameStop, like AMC buyers, like it's that group of people who are involved, yeah, in that situation in 2021. Um, yeah, it's kind of like the opposite of like the BitMEX situation a little bit, a little bit now that I think about it. But yeah, I think that's a good note to close the show off on. I don't know. Does anyone else have any last thoughts?
All I was going to say is to Mariano's point of with the GameStop situation and the same what we spoke on earlier in the show when Robinhood made everyone like they stopped letting people trade their Solana. It's kind of ironic, right? That an exchange that sort of at times abused its power to be able to like turn on and off the buy and sell button is now going into a technology which has the intentions of, open access for everyone, the immutable nature of the blockchain. And it kind of reminds me, like, I bet you've all got friends out there who maybe when you were younger, they would always say, oh, for me, I will never smoke cigarettes. I think cigarettes are disgusting. They're terrible for you. Anyone who smokes cigarettes is a complete idiot. Only to then see them a few years down the line smoke cigarettes like an absolute chimney. And I kind of feel like that Robinhood has sort of fallen down a similar path where they abused the power where they could, but then they got a taste of what the good stuff is. And now they've like reformed themselves and they're like, no, actually, we're here to help the people. We're going to allow everyone to do what they like. But that's just my own crazy way of thinking. So might be a
Yeah,
good
thanks.
note to end on before I ramble too much.
Yeah, I think it's an interesting analogy to end on. Smoking Robinhood. Yeah, for the listeners, thank you everyone for tuning in. For those that stayed around, make sure to follow HTX Ventures on Twitter. Yeah, and also obviously check out Alea Research. Make sure to join our platform and yeah, follow us on Twitter. Enable notifications for all of our updates. Thank you guys.